Hi traders, and welcome to this tutorial. In this tutorial I'm going to show you what I've been doing on the hourly chart, and I'll show you how I'm configuring the strength software and how I'm using the supply and demand indicators to find the nice low risk entries. So if we have a look here on the right hand side, we have our strength dashboard as always, and on the left side we have our price chart. And so what I want to see here in the strength dashboard is if we have a look at the configuration first, you can see here that we are looking at the past 200 periods for the longer term, and we want to ensure that we're looking at hourly strength information, so we set the enable static period to true. We press OK, and then in the medium term here, this is going to be the past 100 periods, so the past 100 hours. And at the bottom here, then we are simply looking at the past 50 periods, so the past 50 hours, which is about 2 days. And again, focusing on the 1 hour price information. So here we have the price dashboard. And on the left hand side, we have our price chart. We have the supply and demand, so we have the supply and demand levels and the psychological levels here overlapping nicely. And at the bottom we have again the strength information which are identical configurations, as you can see on the right hand side. The only difference being that we are only viewing the currencies that make up the pair that we are currently viewing. So we have the Kiwi and the Japanese yen. And we have the Kiwi, which is the brown line here, and the Japanese yen, which is the purple. And so what I want to do, you can normally do this once or twice a day. You go to the chart and you look for currencies that are strong and currencies that are weak. And yesterday I had 2 trades. The first one was the Japanese yen Kiwi, which is a chart we have up here, and the next one was the Kiwi American dollar. Let's see, my entry was, I have to get it off my telephone. Okay, so my entry was 81.769. So if we put a line on here, 81.769. okay, so here we can see the level, and my stop was initially over this nice cluster of supply and demand levels combined with this big figure level. So we had amazing protection here as well. So we had our stop above this swing high here, and I'll simply put another line just above. I had it maybe 5 or so pips just above here. So we're looking at about perhaps a 35 pip stop there. And my first target was around 20 pips. I wanted to get some of the risk out of the trade. I wanted to leave the second half of a trade open, so I wanted to close the first half with enough profit to fund the stop of the second half. So this is what I did. So when price popped down here around 20 or so pips, I closed half the position, and I moved my stop a little bit tighter to this swing high here, because once price moved down here, I wasn't expecting it to move higher again. And then I left the second half open to move lower here. And I have a shot here. You can see here are the trades, the details about the trade. So this is going to be this one here, where we have, let's see, the entry was the 81.769, which is here, and the stop was 8207. Okay, 8207. So the stop was about there. So that gives us a pip risk of about 30 or so pips. That's not so bad. The profit was 81.25. Let's mark that off as well. 81.25, about there. And so that was quite a decent risk reward. So I took the first position off at about, where did I close it? At 50, which is about that here, which was okay, about 26, the first position, and the second position hit the take profit, which was here. And so by the time price moved below the swing low, I had no risk in the trade. So I moved my stop to, I think it was break even. Can we see here? Stop loss Yeah, 81.76. So in the second half, I had the risk out of the trade, which is nice. Then you can go to bed and sleep without stressing about the position being open and good trades turning bad, and so that was nice. So it turned out very nicely here. And the reason I put my stop here was because we have this little price nodule, this area of consolidation here, and you can often expect price to react here, and so I just wanted to make sure that I was out. Again, I wasn't in front of the computer to assess the situation when this happened, so I just wanted to cash in and be done with it. But as you can see, price continued an additional 40, 50, 55, 60 pips or so. So that was a very, very nice move. And again, you can do these with confidence because we are indeed trading in the direction of the strength. So we're buying strength and we're selling weakness, which this is a very beautiful example of. Again, we're focusing on the strength information. We are looking for the strong currency and the weak currency. And ideally, you want to identify perhaps two strong and two weak. And you want them to be moving up like this. This is very nice. You can see continuing strength and accumulation of buying pressure on the yen here. The same applies for the dollar, but not as much as the yen. Then we have the Kiwi and the Australian dollar, which are selling off along with the Canadian dollar here. Again, primary focus is on this information. Secondary focus or entry criteria is based on the historically respected supply and demand levels, support and resistance, combined with the psychological levels. And here we had our overlapping levels. We had the 8180 level, which is a nice round number, and it overlaps nicely with this beautiful supply level. So support becomes resistance, overlapping within a few pips, and then price just dumped. So beautiful example. Anyway, I'll leave it at that. I hope it was useful. If you have any questions or comments, please feel free to send them in. And if you have any trade examples you wish to share, please send them in with a few comments, and I'll send them out to the members. That's it. Thanks for watching.